Hello, welcome to the European Open briefing for Wednesday, February the 8th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So it's a fairly quiet day this morning. We saw the dollar rebound yesterday, although its gains were fairly limited. The main focus as far as the dollar-yen pair is concerned is that meeting between Trump and Abe on Friday, as traders seek further direction regarding the dollar-yen. The euro isn't doing too well. It continues to face downwards pressure. Early in the week we had concerns about the French elections, and now we've got renewed concerns about the Greek debt crisis. The pound, on the other hand, did bounce back yesterday, and this came after some fairly hawkish comments by a Bank of England MPC member. And in commodities, oil had a big tumble yesterday after US crude stocks posted a large increase in the week starting January the 30th, so that had a big impact in oil prices. But let's begin with the dollar-yen pair. We can see that rebound yesterday, although the dollar gains fell. It stopped just shy of the 112.60 yen level. It's been flat ever since. It's currently trading around 112.30. And of course, this is the reason why the dollar isn't doing too well is because the Fed has signaled it's in no hurry to raise rates, at least not in the first quarter of 2017. And of course, we've got the uncertainty surrounding Trump's policies. We had, of course, all those worries about the immigration ban, the trade policies and accusations of currency manipulation, and at the same time there's been very little on fiscal policies such as tax cuts and infrastructure spending. So the dollar has been gradually drifting lower. We might have some signs on future policy on Friday when the US president meets the Japanese prime minister for the first time since taking office. They will likely discuss trade policy, and they may also discuss exchange rate policy as well, given those recent remarks by the president himself on currency manipulation by Japan and China. We did have some very positive Japanese current account data this morning. The current account surplus posted a big surplus in December, which was the highest since 2007, and that may not sit too well with President Trump when they meet on Friday with the Japanese Prime Minister. Also out this morning we had the Bank of Japan summary of opinions of their January meeting, and the main tone of the meeting was that although inflation is making progress towards the bank's 2% target. There is some momentum going there, but that momentum is not yet firm enough. So basically the Bank of Japan is signaling that they will continue to carry on with their ultra loose monetary policy by targeting the yield curve for the foreseeable future. If we move on to the euro, we can see the euro has been falling since the start of the week, currently trading around 1.0646. That's 1.5 week low. Of course, we've got those worries about what's happening in France. The far-right candidate Le Pen is doing well in the polls. Her main contender, the conservative candidate, his chances have been hurt recently by a scandal. So that puts the far-right candidate in an even better position to do well in the first round of the presidential elections in late April. But also in the past 2 days, we've got renewed concerns about what's happening with the Greek debt crisis. The IMF is still reluctant to join in the third bailout. They seem to be at odds with the EU over whether or not Greece is doing enough to meet the the conditions for its bailout, and the IMF is arguing that Greece does need debt relief and possibly a new bailout as well, but the Eurogroup does not agree with the IMF stand. Also, there appears to be a split within the IMF board itself, so all of that does not look good for whether or not the IMF and the EU will reach a quick agreement on IMF joining the third bailout for Greece. If the IMF was to pull out, it may threaten the entire program itself, because Germany has repeated its stance that if the IMF does not join the program, then they might end support for the bailout deal as well. So all of that has sent 2-year Greek government bonds to a 7-month high of over 10%, and all of that is having a downwards effect on the euro. Let's have a look at the pound now, because we saw a very strong rebound in the pound yesterday. It's currently trading around $1.25, having traded around $1.2350 yesterday before that bounce. We had some hawkish comments by Monetary Policy Committee member Christine Forbes. She signaled that rates could go up soon if the data continues to be, UK data continues to be fairly strong. And that's in contrast to the Bank of England's official line, where they continue to maintain a more neutral stance as to the net direction of rates in the UK. Also, we had the Brexit bill passing through Parliament to the House of Commons yesterday. The government succeeded in not having any amendments added to the bill. The only concession that the UK government made to the opposition MPs was to offer them a deal to vote on the final Brexit deal with the EU. But this doesn't mean that if the MPs don't approve the government's negotiation, that the government would go back to the EU to negotiate a new one. It basically means that if MPs reject the final deal, then the UK would leave the EU without any deal. So this kind of forces MPs to vote any deal, because any deal would be better than no deal. So it's a bit of a mixed response to that, what's happening with the Brexit bill. But the pound, for the time being, although it did fluctuate yesterday on the developments on what's happening in Parliament, at the moment it's being supported by a more hawkish Bank of England. Let's look at oil prices, because we saw a big slump in oil prices yesterday. They tumbled by 2.5%, and this came after the American Petroleum Institute data showed that US crude stocks rose by a fairly big 14.2 billion barrels versus estimates of just 2.5 million barrels in the week of January 30. Next up today, we've got the official EIA data. So if that confirms that big rise yesterday, then oil is unlikely to see a rebound, and it could also fall further. We can see here in the chart that the US crude oil is currently trading around $51.60 a barrel. Before we go, let's have a quick look at the Aussie and the Kiwi. Both of them are basically they're mainly flat on the day, although they've been gradually heading lower since the start of the week. And that's the Aussie is being slightly weighed by Chinese FX foreign exchange reserves data, which showed China's currency reserves fell below $3 trillion in January for the first time in 6 years. Although that was a bigger than expected drop, the pace of decline has been slowing recently, which suggests that the pressure on the yuan from capital outflows is easing, although the Aussie had been slightly negatively impacted by that data yesterday. And as far as the New Zealand dollar is concerned, there was only a very modest increase in dairy prices in yesterday's bi-weekly global dairy auction, so that had limited impact on the Kiwi, which is trading around 0.73 versus the US dollar, while the Australian dollar is currently around 0.7637. We should point out that we do have the Reserve Bank of New Zealand's latest policy meeting later today. If we're looking at GMT in terms of New Zealand time zone, that meeting is early tomorrow morning, and we can see in the calendar this is 22 hours GMT plus 2, the central bank interest rate decision in New Zealand. In other data, it's going to be a very quiet day. We only have housing starts out of Canada and that current account data out of Japan, which has already been released. That's it from me. Thank you very much for watching and have a great day.